Are gold stocks about to launch? Political turmoil in Europe pushed the risk-off button and sent havens like the US dollar and gold higher. Gold is knocking on the door of $2,000 per ounce for the second time, and we're witnessing the third shot of a major breakout above $2,000 per ounce. That's the chart you're looking at right now. So the question brings, gold stocks versus the gold price. Are the gold stocks too cheap? We have received numerous emails about why gold stocks are not performing as well as the metal itself. If you're confused, you're not alone. Let me try to explain. On average, gold stocks are up a higher percentage than the metal, but it is true given the leverage to rising prices that gold stocks should be higher. There are a few reasons gold equities have not responded according to expectations for $1,950 per ounce gold. Institutional investment in the gold sector drives large share purchases that bring prices up or down. The paper gold market, which consists of ETFs backed by gold, has seen billions of dollars of inflow, but the miners have not seen the same capital inflows. That means the money is going for direct exposure to gold, not exposure via gold mining company shares. That's the chart that you're looking at right now that shows the historical institutional fund flow for all of the physical gold ETFs, including GLD, IAU, and GLDM. You'll see that looking at the chart that the March 2022 represented one of the largest net buying of gold-backed ETFs since the gold ETFs came into fashion in 2008. The question really is, though, how good are the pros at timing their big gold purchases? Follow the money, gold fund flows. On average, since 2008, the average positive net fund flow was just shy of $900 million per month. There have been 6 times since 2008 where fund flow buying in the month has exceeded $5 billion. Let's compare the price action of gold based on very high conviction, meaning north of $5 billion in a monthly fund flow, versus 2 times the average flow. For convenience, let's call this the $2 billion per month mark. That's the chart we put together here, showing the average gold price return after fund flow buying. So the black bars are the monthly fund flow of north of $2 billion per month. So that's 2 times the average roughly. And then the gold is north of $5 billion per month. Over the short term, the difference is minimal, or perhaps even less in favor of the big guys. That's the big macro buyers who are buying the gold-backed ETFs. But over the longer term, the very high conviction buys do outperform, as you can see in the chart. No stress, the passive way to own gold stocks. In reality, there are a small handful of individuals who possess the technical and financial acumen necessary to beat sector-specific ETFs. It's a key reason why ETFs have become, in fact, so popular. These sector-specific ETFs provide exposure to the commodity or risk factor an investor is looking for, without having to get your hands dirty or know the specific details of a specific stock. Gold miner ETFs are no exception to the rule. Key takeaway: capital which flows passively into the gold miner sector is a fraction of what goes into the physical gold market. So that's a chart we put together here for you, which tracks the fund flow creation and redemption activity for the ETFs. This is the gold miner ETF monthly fund flow, which is interesting. So if we compare the fund flow of the physical gold-backed ETFs versus the miners in the ETF, there's an incredible difference. You'd think that they would trade in similar direction, but that's not the case. If you look at the cumulative fund flows side by side, the difference in investor appetite is truly incredible at this specific point in time. The big macro funds who want gold exposure have not been buying gold miner ETFs, but they have been buying physical-backed ETFs. The chart you're looking at now shows the cumulative fund flow for the paper gold market versus the gold miner stock sector going back to January 2017. So this is the last 5 years of monthly fund flow physical gold ETFs versus the miners ETFs. So the gold line is the actual paperback gold ETFs, and the green line shows you the miner ETFs, and the y-axis is in billions of dollars. So you can see that as of January 22, you can look at the big upswing in the physical, and then you look at the green line since January 22, it's down. So since January 2017, the ETFs that provide exposure to gold miners has set a net decrease in flow of funds. It's down $1 billion since January 2017, but the physical gold is up $40 billion since January 2017, or the same point in time. So let's think about since the COVID pandemic. Paper gold ETFs have seen inflows of $23.5 billion. That's up 23.5 since the COVID pandemic started. The miners have seen outflows of over $1 billion since the pandemic. This should have contrarian investors salivating. The chart that we just showed shows the risk appetite for gold miners just isn't there right now. The speculative money that historically chased gold stocks, especially the micro caps, is likely caught up in cryptos and NFTs or other sectors. That said, I don't see the geopolitical landscape getting any better in the short term, which should mean that the safe haven assets will continue to see strong bids. My premium research subscribers and Katusa Resource Opportunities and I continue to be well positioned. I've crafted a portfolio of a handful of gold stocks for the coming bull market, and we've recently seen profits as high as 4 times our money in the gold miners. We've easily outperformed the whole sector. I've been in this industry for 20 years with the scars and knowledge to prove it. I believe tensions will continue to build, but eventually unwind in Europe. As the old saying says, this too shall pass. And I don't mean that lightly. This will lead to some major moves in the markets. Some industries will capitalize and others will be decimated. If you're looking to give your portfolio an edge and want to get an inside look at where I'm putting my own money and what I own, consider becoming a subscriber and get into the room. As the saying goes, in the room, in the deal. Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.